The 21st of July, or very fast, we're in July, nearing the end of July. Okay, let's look into the events. I think there's something that I want to share a bit more about today. Earnings season has just kicked off, and so far earnings have been above expectation, or really do they? Because I want to share with you something quite important, so that we don't simply get tricked into it. Now, the same was for last earnings season, whereby it was the same story that I'm seeing right now, and investors bought the narrative and piled into the stock market. So Q1 2023, it was just reported, corporate profits quarter to quarter dropped to negative 5.9% from negative 2.7%. Actually, this is worse off than expected. So, but this meant the market was happy that profits did not drop more than expected, So what really happened during that time is that if you see, from negative 2.7 go to negative 5.9, and your expectation, you were given expectation is supposed to be negative 10, then people will be thinking it's not that bad. But that has been the style going for the last 2 quarters. Later, when I share with you, you will tend to understand sometimes the market, they don't move in a logical way. So the market was really happy, and it went up. So if we have the same situation for Q2 2023 results, that's going to be now is the earnings for Q. They're going to show it, right? So I'll be surprised if the market continue to rise, to be frank. And if you see right over here, now this is corporate profits dropping from the 2.542 trillion in Q3 of 2022. And right now, you see it has been on a dropping trend. So this was negative 2.7, and now we have a negative 5. This number over here, negative 5.9. That was here. So when you have profits coming down and stocks keep on going up, so this is the part where the logic don't mix with each other. I find it a bit weird, right? So Q1 2023's drop, right, is the sharpest decrease in corporate profit since the last quarter of 2020. Okay, this is the sharpest drop already. Now, the current upwards move that we are actually seeing in S&P 500 is due to some heavyweights like NVDA, Apple, Microsoft, Amazon, Tesla pulling up the S&P 500. Okay, so, but to me personally, this is a skew average. S&P 500 means 500 top companies, but there's just only, how many companies here? 1, 2, 3, 4, 5 companies pulling the weight. And these 5 companies alone is actually account for the 96% rise of the gains of the S&P alone. So that means, personally, this is not, it's just profit of a few companies, which represents when you talk about S&P 500, it's top 500, right? But of course, they are based on their size, and then there's weightage towards it. So what you're actually seeing is not something representing the real picture. If it's just only a certain group of people actually making, and that's why you can see over here corporate profits are dropping. It's only these people, yes, they are making, but the rest, they are not. So can this continue to rise and rise and rise? That is the question that we all need to really investigate and go down in detail. Okay, and that's the reason why I'm sharing with you guys this thing today. Now, at the end of the day, the market is the market, and it will rise and defy fundamentals in the short term. You can run. And through observations, however, fundamentals do eventually prevail. Now, at the end of the day, we want to look at the health of the US economy. How is it doing? Now, if you look at this chart right over here, the US economy, depending how you want to see it, some people say it grew by 2% in Q2. And because it's above the forecast of 1.4, everybody's celebrating, yeah. But if you compare it in previous quarters, right, the US economy is in a downtrend. The GDP here is actually coming down. So is this something to celebrate? Is this the bottom? We need to check. Because if you think this is the bottom, then there is a good chance that we can start recover from here. But the market has been actually rallying starting from here. Economy not good, corporate profits down, but it's not as bad as people expect it is, and then still going rallying and make new high, make new high, make new high. That's the part where you need to start questioning, because like I said, the moment when you have a big bunch of media reporting that we are coming out of a market downturn, the market has recovered, blah blah blah, and all these kind of things. Yes, I do agree with that. But if you keep on buying, you make money when in the stock market. For stocks, if you buy low and you sell it high, but if you buy it high, how are you going to sell it? You can only hope for it to go even higher, and that's where risk comes in. Okay, especially when you're buying things above its value, its intrinsic value. So as a conclusion, observe Q2's earning result. If we still have lower corporate earnings, it will be difficult to mask the uprise in the market further. Now, a plus point right over, this is corporate earnings, but a plus point right here from Atlanta Fed. Now, what I'm seeing is that it's projecting only a 2.2% GDP estimate growth as of 30th June. So that's a 0.2% increase than the previous right over here. So we may potentially see a 2.2, but then only that's a projection. We still need to wait. That's why there are certain things go up because they feel like it's going to go there, but you just have to be careful. And if you remember, I have been, looking for places to sell the S&P 500 as well as selling the NASDAQ. And later when I revealed to you NASDAQ, it actually came to our area and then it gave the bearish pattern, and from there it just came down from there. Okay, like later when I go to NASDAQ, you will have a clearer idea.